Good
Good morning,
morning.
Brett.
Okay. Thank you. Thank you. Thank you. Thank you.
Morning.
Thank you.
Good morning.
Good morning. I want to
Good
start
morning.
with a crazy article this morning. Let me get my screen up here. Right. So the median US home price is projected to hit $1 million by 2050, right as the millennials retire. And Lawrence Yun, who's the chief economist for NAR, gave a speech a week ago, and he was saying, "Look, don't freak out. You know, the median home price was $90,000 in 1990, but understand, by the time we're talking 24 years from now, that 400 and whatever it is, $1,000 median home price will hit $1 million." What's your reaction to that?
So,
So I I think if you own real estate between now and in the next 25 years, you'll get the appreciation of all that, right?
Who wouldn't buy real estate?
Say that again, Jeff.
Who wouldn't buy real estate? Doesn't make
Well,
any
that's what
sense
I'm
not
sitting
to.
here saying. Like, all these people thinking the bubble's going to bust or their real estate's going to go down. I'm going, this is crazy. Like, it's going to be $1 million a year from now. I mean, in 24 years from now, and that's the median home price, right? And obviously, in South Florida, we experience a little bit higher price point than that. So, Richard, wild guess. What will the median home price be in 2050 in South Florida?
well, our median price now is just over 400, I believe. So, in 24 years, I'm trying to do the math in my head at 4% annual appreciation. How long does it take for an average price to double?
Yeah,
Um,
it's about 16, 17 years, isn't it?
that's what I'm coming
Yeah.
up with. Yeah. So
16 years.
So 16
All right.
years, after the median price point here will easily be over a million.
Easily. The
So
other thing he was
a quarter.
predicting, he's expecting mortgage, we haven't lost it, but he's expected flat 6.5% mortgage rates through 2026. He's also the guy that expected or predicted 14% more home sales this year. So I don't know how far you'll take it. But anyway, just starting off with that. We are 6.5% on the mortgage rate right now. Let's jump in. So, weekly stats here. Broward County single family. 757 active status changes. We've been on a downward trend to be expected. This time of year, a little bit less listings come on the market. There's still a good amount of coming soon sitting out there. Under contract and pending. We went down from 186 to 175, which was down from 211. 175 is a good number, not a great number. Pendings went up from 138 to 147, yet a little bit softer. I'm seeing over the last couple weeks of properties going under contract, not falling off a cliff, just a little softer. Um, Yet we closed 277 properties, Broward County single family, which has been rising over the last 3 weeks. So it's kind of contradictory to what I'm saying. But remember, all this happened 30 days ago. This is going to show up in the next 30 days. So did the interest rates climb? Did the Iran conflict, inflation? We're going to talk about some variables, kind of create a temporary softening, maybe. We'll keep looking, right? If I look at Broward County condo, we've got 776 active status, a little bit softer. Same story. We're kind of softening on new listings coming on the market. Under contract went down to 100. That's the lowest week we've had in Broward County condos in quite some time. Pendings, though, went up to 114, which is a healthy number. And then we had 182 closings in the last 7 days, which you kind of think some of that's end of month closings. And 182 is a strong number for the closings. Reminder, 30 days ago contracts. We'll see what happens in the next 30 days. If I look at Miami-Dade single family, we actually went up a little bit in active status changes, but we're not at the peak of where we were in the 700s. There's 129, which is pretty consistent the last 3 weeks. Properties going under contract, and 203 went pending, which is a really strong number for Miami-Dade single family. And then 193 closed in the last 7 days. It just looks interesting to me. These numbers in between these 261, 316 were quite soft, and maybe there's a little bit of a comeback. We'll see. If I do Miami-Dade condo, we had more active status changes this week. We had a drop in going under contract from in the 90s, low 100s to 77, with an increase in pendings, which honestly, that's the biggest number we've seen since April. Properties in the pending category, and then 140 closings in the last 7 days. Miami-Dade condo, pretty strong. Not 241, I'll point out, but 140 is pretty strong compared to what we've seen in the last 5-6 weeks. If I jump out to Palm Beach, I gotta go up here. Palm Beach single family, 721. So there actually was more active status changes in the last 3 weeks. There was a big week early June, but 721 is pretty healthy for Palm Beach. Active listings coming on. Under contract dip to 183. That's the lowest I'm seeing on this chart. We're at 96 pending, which was a big increase, but it's kind of consistent with what we were seeing previously. So 292 closings and 295 the week before were 2 really strong weeks for single family closing in the last 14 days. And going back to the previous end of the month, we had 360. We're at 295 and 292 versus 360 and 298. We'll see what happens first couple days of this week, right? We've got a couple more days before the month rolls out. And Palm Beach condos, 533, stable, active status change, softening going under contract, pretty low number for Palm Beach County. 69 are pending, which is a stronger number than we've seen for probably 8-10 weeks, which is interesting. These are probably a lot of cash deals, right? But 153 closed out last 7 days, 148 compared to 251 and 184, a little softer. Mr. Bass, you know I kick it to you. What do you see?
Well, I actually have a question I'd like to put out to all the agents on this call.
Yeah.
When you put a contract on your property and there's contingencies on it, you're putting it under contract status, active under contract. Are you changing it to pending status when those contingencies are removed, or do you take it all the way through to closing under that status? And if so, when are you putting it in pending status versus under contract? The reason I'm asking, Brett, is I'm looking at those two numbers combined as to a property actually going under contract.
Yeah.
And it's been pretty consistent when you look at those combined. So I'm going, why is one high, one lower, but the other's higher? So what are your answers, guys?
So I go pending when at the end of the inspection period. But
Okay.
my so my question is, if we put a property in active under contract and then 10 days later put it in pending, does that skew the numbers that we're tracking now because it's a new pending listing, but it was already in active under contract?
I think it just pending just counts all the listings in that status.
It's correct.
So
So,
it will go one down from under contract, one up and pending.
okay.
Dave, that's a really good question. And
Because that can skew what we're looking at here.
and
It
you,
was active. It was active under contract for 10 days. We saw it one week. The next week it's in pending, but it's the same property.
Correct.
yeah. And yet I saw in the chat pop up, Jen Weisberg was one of them who said that she keeps it active under contract the entire time because you never know what's going to happen with it.
I'm also keeping everything, and that's why when I'm doing the stats, I'm combining both because for me it doesn't make any difference for my buyers.
Okay. Any other thoughts out there, guys?
I mean, I think that's why we group these two numbers together, right? Because these are all the properties that went under contract or had a status change in the last 7 days.
Yeah.
But it could be to y'all's point, if these 69, or let's say half these 69 were moved from under contract to pending, it's really only 30 new properties in the pending status.
Exactly.
Yeah. Interesting. All right. Any other thoughts, questions? We got a lot to cover. All right. Compass in Florida, specifically Palm Beach, is being sued, and there's a potential class action around it. And there's a home buyer suing them over transaction fees. And what this home buyer is saying is they snuck it in the paperwork. And they thought, obviously, they were only paying the commission. And then later they paid Compass a $475 flat transaction commission at closing. They inserted it into additional terms in the agreement. Richard, I think you're the broker. You should probably tackle this one.
Yep. Welcome
Sorry,
back to welcome back to the 1990s. Give you a little bit of history, Brett. Transaction fees started in South Florida. There was a company called Gimelstob Realty who started charging a $110 transaction fee on every closing. Within 2 years, Coldwell Banker, Remax, everybody else picked up on it. It went nationwide. Going back 20 years ago, state of Florida outlawed transaction fees, and all of our contracts changed. Transaction fee is not mentioned anywhere. When you take a listing agreement, it now says commission percent plus dollar amount. A transaction fee is actually now considered part of your commission.
Yep.
And it's what we try and teach all of our agents. It all comes down to how you explain it to a client. The word transaction fee should not be used. They never reversed that lawsuit, guys. This is an additional commission. And this is where Compass just got caught. Their agents are sneaking it in. They're not explaining it to their clients as to what it is.
Got it.
But
anything else we need to know?
What if you name the transaction coordinator into the additional term saying that it needs to be paid directly to that person?
You're absolutely fine with that, Elsa. You are explaining to your client that they are paying let's say a $495 fee for a transaction coordinator. That's a service being provided to them by someone else.
Yes.
We have a
I'm
number of agents who do that. That is absolutely legal.
okay.
I think this may not even, this may be a non-issue, but it's certainly in our backyard. We need to know about it, right?
It will become an issue, Brett, if it says that they're a proposed class action suit. If it hits that status and goes class action, this can be major damages against Compass.
Yeah. Does it damage the ability for a real estate agent to take a transaction fee or charge
No,
it?
it's all how you explain it to someone.
All right, perfect. There you go. Moving on. Is the housing market turning a corner? What the numbers say. So there's three numbers in here that I think you need to kind of be in tune with. The first number is $78. This specifically is to the price of a barrel of oil. So you realize the price of oil at one point got over $100 and it's currently at $78. Why this is important, if you attended our stats event, we showed you how the price of oil is directly impacting mortgage rates. So at $78, that is a healthy price of a barrel of oil. And in spite of everything going on geopolitically, $78 is a good number for us in terms of the price of oil that will continue to move the economy forward. The second number you need to know is 4.2. There is an inflation rate in the country right now at 4.2. This is going to put pressure on the Federal Reserve to potentially do something with the Federal Reserve rate. I am curious if they'll actually do it. I've read articles where they said they will absolutely do it. I've read articles that said they may wait out the resolve of the war and see if the inflation comes down naturally. But this is the one number, again, I thought we were past the days of inflation, Mr. Bass, that all of a sudden's back kind of dictating what our economic climate's going to look like in the near future. The third number you need to know is 5%. What is interesting about this is we have 5% more pending sales in May than we did the year before. So 5% increase annually, which this is 1 month period, is actually pretty doggone good considering, right?
Mhm.
Like
Yeah.
you would have thought the world would have fallen apart knowing what's going on geopolitically, yet we're actually having a better year than we did last year. If you take just this pending sales number, and I've got another article that's going to show it a little bit better. So these are the three numbers that are kind of like clued in right now. 4.2 inflation, $78 a barrel for oil, and 5% increase in pending home sales. But if I jump to this Housing Wire article, it kind of shows this picture a little bit better. It's saying how the housing market actually survived the Iran conflict. What they're saying is the mortgage spreads was actually the insurance policy that kind of kept us going. And what they mean by that is there's a spread between the 10-year treasury and mortgage rates. And over the previous 2 years, that spread got really large. But over the last 12 months, the spreads got back down into a normal range. And that's actually kind of insured our real estate market for having that increase in pending home sales. But if you look at this chart, the black line is 2026. And for most of the year, we were kind of ahead of the last 2 years in pending home sales. Well, we are drastically ahead of the previous 2 years right now. And this goes to like the start of July here, right? Where we're sitting right now. So all in all, I kind of expect this line to stay way above these previous 2-year lines through the end of the year. Um, I got I've had my foot in my mouth many a time, so I may stand on a fence and say I blew it. But my prediction would be we're going to have more home sales this year than we did the previous 2 years. Still, I believe that.
Yeah,
Um,
I believe too, Brett, it's
yeah.
going to follow the track of the last couple of years, and you'll see that line starting to go down following the other two. But I believe, like you, we're going to be above those lines.
Mhm. I think that's good news for our industry right now. We're still tracking ahead of last year in mortgage purchase applications. I do think there's been a dip over the past 2 to 3 weeks, meaning that you saw it in the numbers. We're feeling a little 30-day softening right now, but I think it's going to pike back up if this conflict actually holds. Every Friday, I'm like, get optimistic, and then something happens over the weekend, and then right before Monday morning, something optimistic happens. My cynical side says that's political, but I'll leave it there. Um, but I do think we're going to hold, and I think we're going to see more mortgage applications. Um, the other thing, you still see these weekly pending home sales, U.S. single family is much greater than it was the previous 2 years. But you see this little dip this last 2 weeks. I think we're in just a temporary softening right now. Any thoughts? Are y'all feeling a little softening in the market right now? Or am I crazy? I'm just looking at spreadsheets. Y'all are out there in the trench feeling it.
It's quiet out here, man.
I feel it.
I feel it.
Okay. I don't think it's going to last. I think it's going to kick back up, but I do think it softened just temporarily. Um, all right, couple more things. So there's this article on Market Watch that says going back to the office may actually be better for you than working from home. Um, and then here's kind of the three big points. It's saying the share of fully remote workers declined to about 11% in May 2026. And it's down from its peak at almost 18% in January 2022. I don't know why, but 11% seems small to
Oh,
me.
yeah.
Uh, but here's what I thought was interesting. It says working from home has its downsides. Fully remote workers report greater mental distress, as well as less work life balance and fewer career opportunities. And then it says hybrid work could be the sweet spot, offering the most mental health benefits while still keeping up productivity and promotion rates. I think obviously they're talking in all careers in general, but I hadn't thought about the mental distress of working from home prior to this article. And it just kind of makes me ask the question like, we know people putting themselves in a productive environment leads to more productivity. And our offices are designed to be that productive environment. And if they're not, I want to know about it, but I do believe we are. And I just think the best real estate agents that I know have some kind of professional environment that causes them to succeed. Um, it was just interesting. I saw this on Market Watch. I was like, I'm going to put that on the industry update this week.
Brett, I'm really glad you did that because I truly believe that when you surround yourself with other people that are in production that are all trying to do more, then your business will go up as well. And I think a lot of the people who work strictly from home also don't see and hear about all the positive things that are happening, whether it's within the market center or within the market itself. So
Yep.
thank you for bringing that up.
Yeah. I believe that, but go ahead, Elsa.
I agree that you need to be surrounded by people who are taking you up, pushing you up and not down. And I would say that even if you're working from home, it doesn't mean that you cannot be into different mastermind and meeting other people on the Zoom. It's also a way to stay connected. I think that we are disconnected and not pushed, higher if we are just staying in our bubble by ourselves.
Absolutely. All right. This article on Market Watch I thought was interesting for a lot of reasons. I don't know that I ever tuned into the Sell America tagline trade, but apparently there was a theme of foreign money, sell America, get your money out of America. But that actually hasn't held true. And what's interesting, it's saying foreign investors poured over 1.4 trillion into US assets this year through April, with the US stock market comprising nearly half of global capitalization. The US dollar's global reserve status remained stable despite a 3% decline in central bank reserves. And factors like 200 years of stability, vast resources, a large domestic market, and pro-business laws underpin US economic stress. And if you go down here to this chart, this obviously is talking specifically about stock market where the money is, but you can see that there's, I think it's 80 trillion in the US markets compared to these other markets. And we're basically half of the world's economy in terms of capital investments. And the reason I put this on our call is I do believe that also translates to real estate, meaning foreign investors are buying real estate like it's going out of style. I know we had a moment where it felt like Canada was pulling all their money out of South Florida. I don't believe that to be 100% true. And I actually had a conversation recently with a couple people from Canada, and they were like, yeah, that was kind of like pop culture for a minute, but it got cold again. And I was like, okay. So I do believe foreign investment in real estate, specifically South Florida, is a big part. And I don't think we should even pay attention to any kind of rhetoric that says they're going to stop buying. I don't think that's the case. Thoughts?
Yeah.
I
And I
was
think
just,
that's especially true in the luxury real estate market.
yeah,
For sure.
I will tell you the experience. The 14 million was cash buyer from Canada. However, they wanted to stay very discreet because they explained to me that it's not well seen for Canada to invest in America. There is a
It's
lot of
not.
peer pressure. It's not. So everything is hidden,
But they're still doing it.
but they're still doing it.
Of course they are. All right. I found that, or Luke found this on Twitter over the weekend. And I thought this was an interesting article. And then I had a couple thoughts. So there's a BC letter. I'm not sure how to pronounce it. And he's saying owning a home in America has never been more expensive. Average cost has gone up 39% since 2019. Yada, yada, yada. Look at this chart. So home ownership cost in 2025 versus 2019. Obviously, the interest cost has drastically increased compared to what it was in 2019. but you can see the principal amount. Now, and here's how I looked at this chart and started thinking about it. So the principal amount has everything to do with prices, right? So if I bought a house in 2019, I paid this price. If I buy a house in 2025, I paid this price. Interest rate, interest rate I got in 2019 versus interest rate I got in 2025. We know property taxes have gone up. We know insurance has gone up. We know home maintenance has gone up and emergency repairs have gone up. However, here's one thing I started thinking about. Interest rate doesn't affect me, and principal doesn't affect me if I've owned my house. It only affects me if I'm buying a new house.
Yeah.
Does that make sense?
Yes.
So the only ones that have actually affected me in my current home ownership is taxes, insurance, maintenance, and emergency repairs. So it's only the people we're looking to sell houses to that are specifically affected by this, which obviously is our industry. Yet, so it's not panic for the majority of the population, is what I'm trying to say. It is a inflated cost for those looking to buy real estate. Now, take interest off the table. If you're selling a cash buyer, that chart looks pretty normal. It only is really drastically affecting your buyers that are getting mortgages. Does that make sense? So if 40% of our transactions are cash, they're actually not that drastically affected by this. I mean, they had the 5-year run of from 2019 to 2025, but it's really only affecting the mortgage buyers. What do you think? I looked at this and my first glance was like, oh hell, or excuse me, oh crap. Like, yeah, this is not good. But then I really started asking myself some questions like, is it affecting the American public? Not that much. Is it affecting the cash transactions? Not really. It's really just affecting the buyer that's buying with a mortgage. I don't know. What do you think when you see this?
I think it affects the investors to some degree, because depending on how much property they own and how much discretionary money they have to invest with, obviously, if the carrying costs are more, then we might be looking at not buying as many properties or buying a lesser property than what we thought we were buying before.
True. Good point. Any other thoughts?
I would say that what I've seen so far with my fellow investors and I've seen in the market, I saw an article the other day and it was basically interest rates are just one portion of the math. The whole math is also insurance and property taxes. So if it doesn't make sense on the long run, all of the other facts, you're not going to pull the trigger.
Yep. Good point. Any other thoughts? All right, I'm going to end on a crazy article. California Exodus 2.0. How SpaceX tech IPOs could trigger the next massive wealth flight to Florida. Experts say newly minted tech multimillionaires are already flooding Florida brokers with calls. Has anybody gotten calls? Okay. With OpenAI quietly filing for IPO, SpaceX IPO, it's going to make a lot of people millionaires. When those people become millionaires, they tend to buy real estate. And I recently started playing around with LinkedIn ads. And I thought about that when I read this article is how would I even get to these people? And I don't know if anybody on here is deep into LinkedIn, but I promise you these people are. And if you've ever played with any internet lead generation, LinkedIn might be an opportunity for you to test and run some kind of ad on LinkedIn and maybe target some of these companies and these people, and see if you can't get to them before they make their first phone call. Just a random thought. What do you think?
Hey, Brett,
Yep.
I was just paying attention not long ago to the state of California is about to vote on passing the billionaire tax as well. And they're saying that 54% of Californians are in favor of it, but even the governor is saying no because of exactly this problem with the billionaires leaving and taking their companies out of California. So it's it's a very apropos article right now based upon what's going on there.
There you go. I think it's a good place to sell real estate in South Florida these days.
Yep.
There's your update, guys. Anything else? Richard,
Nope.
give us the last thought.
Listen, I don't think there's any place better to be in the country than South Florida. I enjoy traveling around, but always nice to come home. And I think we've got one of the most stable, long-term real estate markets in the country. As always, just keep doing what you got to do every day, and you're going to be massively successful.
Rock and roll. Thanks, guys.
Thank you. Have a
Thank you,
good
Brett.
Thank you.
Bye.